Hello, Maverick traders, and welcome out to your daily market roundup. This is Ankit here, and let's break down today's market price action. It's a Wednesday, September the 25th. Let's get into it. As always, we'll be breaking down what happened in the markets today by looking at broader market analysis, then take a look at our sector heat map analysis, and then we'll take a look at possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at market analysis today, let's just jump right into the numbers. And I must say that these is one of the tightest range that we have seen in the market, especially the last 5 days. So just looking at the numbers today, nothing really whopping here. Dow Jones down 0.30. We're looking at SPX down 0.19. The Qs actually outperforming 0.09, and small caps are really the one taking a bit of a hit here. We have the oil that's sort of retreating back after some nice few days of rally. It's just giving back some of its gains, and where gold is just steady here. So as you can see that in the headlines, there's nothing really major going on. We had a big sort of a rate cut last week, and that was the entire anticipation. But since then, things have really slowed down in terms of activity, in terms of the range that we see during the day. So overall, I think the equity markets just to continue to trade in this tight range. And if we take a look at the markets pricing in, 60% chance now for another rate cut of 50 basis points in the upcoming meeting. Now, the last meeting, I was kind of surprised, although the markets were right. They were pricing correctly. This one, is it going to be a correct one? I just don't know. I'm still sort of doubting that the market's going to cut another 50 basis point in the next meeting. But keep in mind that that's what the market is doing. 60% chance. They were about 50% chance the day before. So they're only increasing that market's going to cut. So we'll see. Again, we still have a lot of data to come out, and that data can really change things. And we always get to see markets getting ahead of itself. If the data start to improve, I think we'll see that. If the data start to deteriorate, that's just going to fuel that bet further. So we'll see what happens. Data dependent, and we'll see when those numbers comes out. Now, looking at the advanced decline ratio, you can see it was only 23% up and down 73%. So it was not really a bullish day, even though percentage change was really small. Now, you take a look at the plus minus 50 moving average, you can see that this number really hasn't changed. We're still sitting at about 67% above 50 and then 33% down below 50. So not a big change in that number. Now, let's just take a look at the chart here, because I know this is the chart that you look at and be like, now this is like watching paint dry. And exactly that's what it is. Not a whole lot of opportunity. The body of the candle is really small. And this is, again, after that big break that we had. Now, this is a very sort of a tight range that we're getting here. Now, again, as we take a look at the setup, this is still a high base. Although it's a tight range, it's still a high base. So really, you don't want to get ahead of the markets here and say, well, maybe we'll retest the support. Right now, that's not looking so. So I think we'll probably continue trading in that range where we go up and down, and eventually we break out. But I think that's what we have. That's what we have in store for us currently right now in the markets. Now, if you take a look at the Qs, well, they look a little bit better. They're right above that the previous trend line here. Again, the resistance line, and it looks like it wants to break out as well. Again, not showing any sign of weakness. The only area that I really saw where it's showing sign of weakness is really the small caps. That's the one really getting hurt here. So that's really what's going on. Let's take a look at the heat map analysis. As you can see that the plus things were today was like the Microsoft and Nvidia, and again that explains why Nasdaq was actually positive to slightly up today. But outside of that, it's a whole lot of red, not a whole lot of action going on. So that's really what we have here. Now, if we take a look at the outlook, has anything changed? Well, nothing really has changed for me. Like, we are still above the 20, still above the 50. There's no sort of sign of a big reversal, and this is just a ordinary range-bound price action. So now let's talk about potential trades. Again, this is the environment where I want to just slow down on my new entries because I don't want to be staying in things that are consolidating. But I still have few bullish trades and a couple of bearish trades. So let's get into it. Now, looking at our bullish trades, Walmart comes to first. And again, I'm looking for things that are either about to break out or just broke out. And again, this is the one that's just broke out here. So I like this further to the upside. So we got the prior resistance becomes a support. So I would really like this to kind of hold on to this level and then continue moving higher from here. So we're sitting about 81 over here, 81.40. Looking at the bottom side, we had 78. I'm looking for a target of like 84, 85 would be a decent one here. So this is the one that I like here onto the upside. The second one goes is Alibaba. So you can see the big move we saw out of China. If you take a look at the China CTF, with their major central bank policy changes, we're seeing a lot of that money coming in there. So if I want to go in that ride to some of that move here, then again, Alibaba, which has been kind of staying on the down low between this 80 to 86 range, it's finally broken out here. So right now it's gapped higher, it's pulling back. I would love to see that sort of stabilize and then look for the next leg higher into this one. So that's the one that I'm looking at here. After that, I have AMD, which again is just broke out today. So I'm looking at things that are not overly priced and they're at a good level. So this thing seems to be a good level. Broke out nicely here on a down day, which is again a good sign. So I like the AMD here. And lastly, if we take a look at the bearish ones, let's just go with the bearish ones here. Merck is going sideways to lower, so a bear call spread on this one. I like it here. Again, not really showing any sign of strength. And then secondly, the one I like here is Adobe. Again, beautiful pattern here. We broke lower, we gapped lower, and then pretty much sort of have a little bear rally over here, and it started rolling over from here. So I like this one on a short setup here, just to have a balanced approach as far as the portfolio management goes. So that's really what we have. I think market is going to continue staying this range-bound price action until or unless we get a news catalyst that could really break us out. Right now, just want to be holding it steady and just wait for that right moment, because we consolidations can last for some time, days and weeks. So we got to be a little patient on that one. As far as economic reports go, we have tomorrow final GDP, and then we have the core PCE on Friday. As far as the earning goes, the big one tomorrow is Costco, ACN, and that's pretty much it. So, this is, again, markets give us these, bursts of volatility and things sort of quiet down, and right now that's what we are in. So this is, again, a great time to sort of take it easy, take it slow, and then build up our positions, especially think about how things will go, for the remainder part of the year. We're still at the end of that volatility period. October 15 is where things sort of simmer down. We are already seeing that simmer down, but we can always get some pulse of energy here and there. But past election, again, that's really where we're going to start looking into as far as the position portfolio management goes. So thanks for joining here. Have a great rest of the day, and we'll see the next update. Cheers.